morning, everyone. My name is Cheryl. I am the head of strategy at Kamino Foundation. Very nice to see all of you today. Thanks for coming out. So today I want to chat about briefly what is Kamino, why use Kamino, why we are the leading DeFi protocol on Kamino as well. So why are we here? As you guys are probably all here for, everything is quickly moving on chain. Solana is really becoming the settlement layer for all assets traded, bought, sold, and we really want to make things useful and productive at Kamino. Solana has been seeing outsized growth. It used to be only SOL, meme coins. Now we're seeing tokenized equities, tokenized bonds, credit, all coming on chain, including stocks. At Kamino, we are the leading DeFi protocol on Solana. We roughly have about $5 billion in total deposits and borrows. So we are at all-time high. So wanted to kind of briefly introduce us and talk about what we do. So we've been on Solana for more than 4 years now. Started building in 2021, back in V1. Today we have $13 billion in borrow volume to date over the last 3 years. In terms of the numbers, if you look at our safety record, V1 launched in 2023, and for the last 3 years, we haven't had any incidents. None of the LPs have lost any money on Kamino, which is very amazing given the volatility on Solana. Our total market size is 4.43 billion. A lot of people basically deposit SOL, Bitcoin, stable coins on us, and borrow from then on. Together, we've done a total of 132,000 active loans to date. So what is Kamino? I'm guessing quite a few of you guys have already used Kamino before. Basically, on the lending side, lenders supply assets to earn yield, and borrowers will over-collateralize their collateral and borrow against it. As Solana has really grown from not just having Solana, liquid state tokens, but also really meme coins, tokenized equity, stocks, and bonds, we launched V2 several months ago, really to take into account the fact that there were a lot more different assets and therefore different risk profiles into the market. Therefore, we wanted to have isolated markets in our lending, so we launched V2. In 2023, there was only SOL and LSTs. If you look at where we are today, I already mentioned this, we have a lot more different assets on the platform. So with isolated markets, we basically are able to isolate risk across different pools. As you guys can imagine, even though Fartcoin is super liquid and trades a lot, we would not want it in the main market. Therefore, we have different pools to account for that. So number one, we have a borrow-lend market. Number two, we also have an earn vault. And the earn vault basically simplifies a lot of the lending and borrowing on the platform. So with the earn vault, you basically have professional risk managers, whether it's Gauntlet, LA, Steakhouse, all of these professional risk managers are basically doing due diligence on every single pool. So some of these pools, for example, LA might have chosen the main market, the Judo market, the JLP market, and they are constantly dynamically reallocating any of your deposits into each of these pools in order to get you the best risk-adjusted yield. So in other words, as a user, you don't have to be constantly dynamically adjusting your positions to get the best yield, as a lot of these rates keep on changing. As we mentioned, we currently have a growing curator system on the earn vaults. We have LA Labs, Steakhouse, Gauntlet, RE7, MEV Capital. Centaura is a partner that we are working with for Pi USD. Several of you guys might know that we have quite a big Pi USD program going on. Please definitely come check it out. Currently at 20% yield. PayPal is really trying to incentivize the market. We are the exclusive partner on Solana as well. Before going on to security, I also wanted to briefly talk about Multiply. So Multiply is a one-click leverage position that we have. Many people have been using it for LST and SOL loops. So basically for leverage carry trade. And this is just a one-click position on Multiply. So a lot of people have been using us for LST loops or USDC loops. These are probably one of our most common Multiply products. We have in total about $1 billion deposited in Multiply today. So we kind of talked about our basic borrow lend, our earn vaults, and Multiply. I also just wanted to briefly touch upon security, because security is at the forefront, really important for what we do. It's really core to us that our users' funds are safe. We've done 20 smart contract audits today. In 3 years, we haven't had any incidents ever since we've been live on Solana. Fully open source since day one. We are also verifiably built on both our borrow lend as well as on our earn vaults. And we've gone through 3 formal verifications. And a lot of these institutional grade securities, the reason why exchanges or bigger partners really choose to integrate with us. To date, as I mentioned before, we've had 0 bad debt. All the LPs have actually managed to get their funds back by lending on our platform. So we like to position ourselves as the best risk-adjusted yield on Solana. In case you guys want to take a look, please go on to our security webpage. We have all of the disclosures out there. You'll see that we have a public risk dashboard in which you can do live monitoring of all the positions on Kamino. What's next? We talked about many different assets on Solana today for which we are providing a credit marketplace for. It's all we think about. Credit is the only thing that we do and breathe. As a next leg of growth, we will be looking into more institutional products. So what do institution funds need that are slightly different from retail? Is it margin call capability? Is it fixed rate? Is it private credit? Is it qualified custodians? We are constantly thinking about this. And across various other spheres as well, we will be introducing new products very shortly. That's the end of my presentation. Thanks for listening. My name is Cheryl. Feel free to reach out if you have any questions. Thanks.